Hi guys, it's Nishi here. Hope you have a great Friday and are looking forward to the weekend. So in today's video, I'm going to move pretty quickly because I've got a few things to cover. But this video is titled The 6 Best Ways to Save Tax in 2022. This relates to limited companies, by the way. What I just wanted to do first, though, is before I go into that, I just want to remind you we've got our quarterly planning day on Wednesday, the 7th of December, 2022. And if you really want to figure out what you need to do in your business to start growing it to the extent that you really want and get the results out of your business that you really want, then this day is an absolute must in terms of attending. So if you want to find out a bit more about how to attend that day, then just go to our website naccounting.co.uk and you can find out more and book on there. So back to today's video. What we're talking about is the 6 best ways to save tax in 2022. And this is a really brief summary because I keep getting told off by people for having really long videos. So I'm not going to go into any detail, but just a really top overview. And if you need to learn more about any of these things I'm going to cover, then just get in touch with me or my team and we'll let you know. So 6 things here, and I'll just go through them in order, although depending on how much tax you'll save depends on your own business, and these really apply to limited companies. So if you're a sole trader, some of these might be able to help you, but not all of them. So firstly, if you've got family members in your business and they're helping you in your business, then just getting them onto your payroll and getting them paid officially, and also depending on the nature of their work in your business, potentially even giving them shares in the business so you can pay them as dividends. That can really help you distribute the money within your business to your family in a way which lowers your tax bill. Obviously, it's got to be done on a commercial basis, so you can't just make up a role for them that they're not actually doing. But a good accountant can always help you get that right. So, secondly, controlling your dividends is really important. If you take too much money out of your business, especially money you don't really need, and all you're going to do is put it into a savings account, then by taking too much money out of your business, you can actually push yourself into higher rate tax, and paying that extra 32.5% higher rate tax for dividends is worse than and then putting the money into a savings account so you can earn like 0.5% a year or 1% a year on interest on it just makes no sense. It would take you probably like 30 years, 32 years just to get back the tax you paid in interest. So controlling your dividends is really important. Working out the optimal ratio in terms of salary and dividends makes a lot of sense. So research and development tax credits is number 3. Think about the things you're doing in your business that might constitute some kind of innovation for your industry. And if you can think of those and they're substantial, then what you should really do is talk to a couple of R&D experts. I always recommend talking to a couple rather than just one, because sometimes you need a second opinion. And depending on what they say, you might be able to claim a rebate from the government for a lot of the work you've done, or get your tax bill written off, or part of it written off. Number 4, it's definitely not my favorite if you've watched some of my other videos, but it does represent a tax saving. Pensions, you get tax savings when you put money into a pension. You get tax savings when you take money out of a pension. The only thing is you're locking money away for until you're 55, and then you're also relying on other people to manage your money. But you can have something called a SIP, which means you can manage your own pension as well. So then you got what we call the SPV, number 5, special purpose vehicle. If you want to put money away for the future of your family, but you don't want to tie it up into a pension, and you potentially want to do other things you can't do with a pension, then like buy a residential property, then an SPV, special purpose vehicle, is a great way to do that. It doesn't give you the same level of tax savings as a pension, but it gives you a lot more flexibility. And then finally, although it's not quite final, but these are the substantial ones. Electric cars, the tax savings on electric cars at the moment are very substantial. Compared to if you, depending on which rate of tax you're in, it's almost like the government paying half or even more than half of the car for you, because you get some of the VAT back, you get dividend tax savings on it, you get corporation tax savings on it. It's a great deal. And finally, all I'd say is that there's a lot of miscellaneous things like, trivial benefits, the super deduction, all that kind of stuff going on. But the reason I And actually, you know what? If you do want to find out all about that, I've got my tax guide which I wrote. So if anyone wants to learn about those things, then they can always drop me an email at nishi@naccounting.co.uk, and I'll send them a copy of that guide as a PDF. But those are the main things at the moment, but there are lots of other little things, and also depending on your situations, there might be other main things as well, but these are the ones that affect most businesses. So just remember, if you found this video useful, just remember to like, share, follow, and subscribe, and come to our next video. And if you want to spend the whole day with me and my team and other like-minded business owners, then come to our quarterly planning day on Wednesday the 7th of December. Okay, catch you later. Have a great weekend. Thank you.